Back with us here on Chartbusters, and the next management is Thomas Cook. It's on the back of its fourth quarter results. The margins saw an expansion. The revenue and the EBITDA also rose on a year-on-year basis. Mahesh Iyer, the managing director and CEO of the company, is joining in to discuss the quarter gone by. Mr. Iyer, good morning. Thanks a lot for joining in. How has business been in the summer so far? Peak travel season, the vacation months as well. How is business looking like right now?
Thank you so much for having me on the show. It's a pleasure always to talk. Yes, the forward bookings are looking very strong. We are currently looking at about 18% forward booking growth over the previous year. So summer has actually begun very strong. Obviously, because of the elections in the country, there has been some postponement, and our belief is that we're actually going to see a longer summer season this time. Usually we see the peak starting from April and ending somewhere in June. This time our expectation is that we'll see this all the way running into August also. So yeah, I think we have a long pipeline ahead of us, and I'm remaining very optimistic about the summer ahead.
All right. So the last time you spoke to us, you said that you all will see double-digit growth in FY25 on both the revenue as well as the profitability. If you could give us a sense of what's your outlook now that you've seen 18% forward booking growth itself, at what rate is the overall company likely to grow in FY25? What kind of margins are you targeting?
So if you look at the year that went by, we've had a very strong growth. Our revenues grew about 45% and consequently EBITDA multiplied many folds. And also our EBIT margins improved by about 300 basis points in the current quarter and for the full year. We expect this trend to continue, both in terms of revenue growth as well as profitability. And some of the drivers for that is that there is a strong desire for travel, and we are seeing the volume growth actually coming through, and our forward bookings are reflecting that. Also, the initiatives that we have taken in terms of cost transformation during the pandemic have all played out and are sustainable. Thirdly, the digital adoption is actually working well for us, which has improved our productivity substantially. We believe that all the three drivers that we have on this business should help sustain the growth momentum in FY25.
Since you mentioned the pandemic, Mr. Iyer, you had also mentioned that you would cross pre-pandemic levels in FY25. Do you stand by that statement? And part two of my question is, in terms of travel trends, are you seeing more short-haul travels during this booking season that you're witnessing?
Yes. Let me take the question in two parts. The first one, for FY25, you're right. We expect the growth momentum to continue. We expect the margin expansion to continue to happen on that. As far as trend on travel is concerned, we definitely see a shift. Earlier, it used to be more long haul. The group travel used to be more long haul driven. Today, what we see, the trend shifting to more short haul. And that's driven by the fact that people are looking at more shorter breaks. So clearly that trend is visible, and our recovery on the short haul is much higher as compared to the recovery on long haul. You would remember that we said the long haul was impacted last year during summer with regards to some visa challenges. A lot of that is behind us. The Schengen regime has changed. They are talking about long-term visas ranging from 2 years to 5 years, which I think will also propel the short-term travel trend, because now people can actually, who have got long-term multiple entry visas on their passports, can plan their holiday at a very short notice. And we believe all of that will help the short-haul business to grow. Also, short-haul destinations like Middle East, Singapore, Far East are all excited about India. India seems to be the biggest market for them. They have doubled up their investments in this country. And I think a lot of growth momentum will come from the short-haul market. Not to miss the domestic side of the portfolio. I think spiritual tourism and adventure tourism in the country is catching up very fast. We are seeing a lot of demand coming from there. And I think we operated our first charters to Bhutan out of Bangalore, and we've seen 100% occupancy on the charters. So clearly, I think the trend towards domestic is also auguring well for the business.
Right. Let's talk about two other parts of your business, which are relatively smaller, but may go through underlying disruptions as well. This is the financial services and the Digi-Photo business. For the financial services, with in the world of easy forex transactions, in the world of UPI scaling up beyond India, what's the scope of growth here that you foresee? Fourth quarter as well, the growth was sub 6% out here. And even Digi-Photo, I mean, all the things that you offer in Digi-Photo, a lot of that can be replicated with the phone that everyone has. So I'm just trying to figure out what's the growth potential here and on the underlying disruption.
Sure. So first, coming to foreign exchange, you must understand that it's a scale business. We do about $3.5 billion a year in terms of top line sales. So that's a large volume business. And on that, volume growth will be in the range of about 10 to 12%, and that's what our expectation is. I think if you look at the portfolio overall, there is a retail business that we do, which is more like the student segment. There is the remittance segment. There is the corporate segment. I think all of them are witnessing double-digit growth. Now, the retail segment also includes the students as well as the travelers. And on that, we are actually seeing a high double-digit growth. In fact, in the quarter that went by, our retail business actually grew by 18% and margin expanded by about 20 basis points. So clearly, the retail growth will fuel a lot of demand that is there coming from the travel segment. From a prepaid portfolio, we have a large prepaid portfolio, and I think that is where we address the UPI challenge. While UPI and cross-border is something that's happening in the neighboring countries, I think acceptability worldwide is going to take some time. And that's where our prepaid offering, which is the Thomas Cook prepaid card that we offer, actually fits into the scale, because we have a multi-currency and a single wallet for the customer to seamlessly load. And we have also launched the digital KYC for the customer. So he can sit at the comfort of his home, load a card for himself, get it delivered at his doorstep, and seamlessly travel. So one is to do it on the phone, the other is do it on a card, and the card is also digitally enabled. So which means, like UPI, he can put the plastic on his card and he can use it seamlessly overseas. So I think we are up the game in terms of how we can look at the UPI part of it also. But I'm also happy to let you know that we also work with RuPay, and we are in active conversation with NPCI to say as to how we can expand our offerings in terms of building more on the RuPay side. Coming to digital. Yeah, sorry.
All right, Mr. Iyer. I was falling short of time, but thanks a lot for joining in and sharing your views on the road ahead for your company and on the quarters ahead as well. That was the management of Thomas Cook there, sharing their views on the quarter gone by. They're 1.5% lower at 215. That was the management of Thomas Cook. But time